Good afternoon. It's Friday, January 6th, a whole new year, 2023. And we look at the Bitcoin market, and I'm reminded of the old Saturday Night Live sketch that Chevy Chase used to do. Generalissimo Fransisco Franco is still dead, which was their way of basically saying that the news was more of the same. If you look at Bitcoin, it is more or less almost exactly where it was 6 weeks ago. Over the last week, it's traded in a range that I don't think I've ever seen it that small. Ether is pretty much trading where it was 6 weeks ago. Volatility is incredibly low. Volumes are, checking, it looks like December's volume was 50% versus lower than the preceding average of the preceding 6 months. And the preceding 6 months, with the apart from the spike and mad dash to the exits a couple of times in June and November, were well below where it was in 2021. So the market is more or less sitting there, and not a whole lot is happening. There's just not a lot to talk about. The market's in the equilibrium state. Bitcoin, I'm seeing as an incredible opportunity, but it's an opportunity that looks like it's going to last for a while, because what you're seeing is the hash rate, the network strength of Bitcoin is at an all-time high and still hovering around there. It's been nothing but up and to the right, as it were, and the price is sitting exactly where it was. Basically, what you're seeing is more and more of the long-term holders are just sitting there with their Bitcoin and no forced selling to push the price down, and less speculation overall without FTX. So it's a market that's kind of sitting there waiting for a catalyst. Some people see is no catalyst. The only catalyst is down. I'm not so sure that that's true. What's going on in Hong Kong in terms of liberalization of policy toward crypto, and in general, that couldn't be happening if it wasn't at least tacitly approved by the Chinese government, could very well be a big thing. There's other big things. There's more and more signs that central banks don't really have a choice. And while the U.S. Federal Reserve is going to almost certainly keep on their tightening course for a while, others might blink sooner. And so we'll see. The fiscal situation is continuing to get out of control. Congress last session passed a $1.7 trillion bill. And now the Republicans, who theoretically would have been a check on spending, if you believe that, can't even nominate a speaker. So I don't expect a whole lot to happen, but the market does seem to be reasonably well bid at these levels, and not a whole lot of selling and no bids to take the price higher. So we're kind of sitting in that stage. So what does it mean? Well, I think it's a good time to accumulate Bitcoin, but it's a bad time to be a miner, because miners need to sell, and miners compete with other miners. And as the hash rate goes up, it makes their job more expensive. And so that is kind of a problem for them. Now, the truth of the matter is, I have no idea how individual miners should be valued based upon all of their equipments. I'm not an analyst. I haven't dug in. I am not saying to short any miners and buy Bitcoin. What I am saying is one might just do the simple thing and buy Bitcoin, put it in a wallet, take it off the grid, and wait for a few years. And I think you'll be in pretty good situation. Okay. So what are the news items that come out this week? I could talk about FTX. I'm not going to. The fact is Sam's trial date is set for October. It looks now like his chief attorney is turning on him as well, with multiple people with guilty pleas and other people turning on him. We'll see how it goes, but it's getting bleaker and bleaker for him, which is better and better for the industry, because frankly, the industry needs perpetrators to get punished, and we need theft to be punished, and we need the story to focus on theft. We need the story to focus on the bad things that were done by people in crypto firms. So the one piece of news that did come out this week that's really interesting is Latisha James, the Attorney General of New York, is suing Alex Mashinsky. Now, she gave a nice tweet storm to talk about what she was doing, but more or less it boils down to the fact that he lied to investors about how easy it was to make the money that you would make. He lied to investors about how safe their funds were. And if those allegations can be proven true, then I think that's a good thing. I don't have any particular knowledge of the situation. In point of fact, as I've disclosed before, Celsius did invest in CoinRoutes, and they used to be a client of ours. But the only thing we knew about Celsius is that we provided them services to get best execution, which is a good thing. We have no knowledge whatsoever of the lending program or what they offered investors, and so I'm going to stay out of it. But what I do want to comment on is the last sentence of Latisha James' last tweet in the tweet storm. She went from a perfectly reasonable thing, talking about how important it is to go after people who harm investors in the state of New York, to, and this shows why it's dangerous to invest in crypto, which is a logical leap that's literally insane. The truth of the matter is, crypto is no more dangerous than any other asset when it comes to investing necessarily, but people who lie, people who provide misleading advertising, they should be punished. And that is something that would happen whether it was about oil wells, about real estate, or about stock schemes. SPACs are another one that people are now getting hot and bothered about. And it looks like there might have been some bad things going on in that sector. The fact of the matter is, what's gone on in crypto is predictable and unfortunate. Now, it's unfortunate because obviously, if the industry is being, quote, led by those who tend to look more like snake oil salesmen than investment sales, that's going to be a problem. But it's predictable because the approach of the SEC for the last 5 years has basically been to punish people that they can punish, but not to engage with the industry on rules. Now, what does this mean? Ever since Hester Peirce's original plea to Jay Clayton to set up a safe harbor to work with the industry to craft rules so that companies can register was rebutted, and Gary Gensler has rebutted it since, you have a situation where firms that are brokers, firms that have cultures of compliance, have been disincentivized from participating in crypto, which has created what I call a negative selection bias. It means that more firms that are participating in crypto tend to be those that are more fast and loose with compliance. Firms that don't have a compliance department looking over your solicitation saying, you can't say you're going to guarantee a rate of return. Firms that say you can't tell people it's not risky without disclosing the risk that you're taking. These are things that would happen were there a culture of compliance at crypto firms, and they're not. There are multiple principles. In fact, there are three that I care about that I'm going to highlight that come directly with being registered with the SEC and having a culture of compliance from brokers. One that is beaten into our skulls. And for those who don't know, I've literally run 3 broker dealers in my career, so I know this. The first is no false or misleading advertising. All your communications are looked over and validated. And if they're not, then you could get yourself and the firm into a lot of trouble. Things that would always trigger a red flag. I guarantee a rate of return. There is no risk. It's less risky than a bank, or other things like that. The second, no market manipulation. Don't put in orders for the sake of moving the price of an asset and not necessarily because you wanted to buy or sell it. It sounds obvious, but it's a big deal in the brokerage world. And yes, people get fined for it. And they try it all the time. But the most compliant firms do a great job of surveilling against it, and so do the regulators. In crypto, even in the FTX situation, sorry, I said I wouldn't mention it. FTT was clearly alleged to be manipulated. And there are many things that are manipulated, and people are concerned. Now, if there was that culture of compliance, if there was a regulator, we would have less of that. The third is something that is near and dear to our hearts at CoinRoutes, because it's what we do, is promote best execution. If you're buying or selling for a customer, you will try to get them the best price, and you will prove it to them. Now, not everybody does this. There have obviously been issues over the years, and being a security is no panacea, but that culture of compliance will be helpful. But all of that has been thrown out the window by an SEC that is dedicated toward enforcement. We made fun of them for going after Kim Kardashian. They've gone after tokens like Library and frankly, or LBRY, and frankly, even the XRP case. They're not alleging any of this about investor harm. If you want to prevent investor harm, you focus on the right principles. And the best way to do that is to bring firms in, talk about what the right rules are, and make rules that work. They have not done that. And that's something, as we move to the new year, that we would like to see more and more. The only other piece of news that was interesting this week, and it is important, has to do with banks and bank regulators. The bank regulators put out a joint statement talking about the dangers of being invested in crypto, the dangers of touching crypto on the balance sheet. In the same week, the Silvergate Bank is having real troubles. I think somewhere around 2/3 of their bank deposits have been withdrawn. It's been a classic run on the bank scenario, only based upon allegations that they facilitated crypto firms doing untoward activities. Now, I have no knowledge of the situation, but what I can say is that a world where fiat on ramps into dollars are not facilitated by legitimate banks, the market will get even shadier. If you're trying to make the market a better place, welcome in the firms. Don't stop banking, don't cartelize the situation, and work with crypto firms rather than against them. Otherwise, that market will just move overseas, and the US dollar, which right now is the most important currency backing almost everything in crypto, whether it be stable coins or fiat, could easily lose dominance. And that would not be a good thing. We'll talk about that more in the coming weeks. For right now, I'd like to see something change, but not much has. Anyway, stay safe out there, and goodbye.